All right, folks, what's up? It's your host, Max Pitts from Trades and Gains, and let's talk about the wild ride that we saw on Wall Street today. The S&P 500 and the NASDAQ both had a dip, but the Dow was able to inch up, all thanks to new PPI data and a fresh twist in Trump's tariff strategy. Well, wholesale inflation came in softer than expected, but there's a lot more going on here. So let's just dive right into it. So to kick things off, we had PPI come in, or the Producer Price Index. And the way you can think of this is it's how much stuff costs before it hits your local store. But here's our headline for today. Prices rose 3.3% year over year, slightly higher than the November reading, but below the 3.5% economists were expecting in today's report. Monthly growth, we saw 0.2%, which came under the 0.4% that was also expected by economists. Now let's get to the nitty gritty, which is our core CPI or PPI, which is going to exclude food and energy. That was flat month over month. That's a win, but core prices still rose 3.5% year over year, slightly higher than November. So what does this all mean exactly? Inflation isn't necessarily gone, but it's also not spiraling out of control either. Now, here's a curveball to throw at you, so be prepared. President-elect Trump's team is reportedly planning gradual tariff hikes instead of a one-time spike. The idea is keeping inflation from blowing up while still making a statement on trade. But let's not get surgical about it or sugarcoat it. Tariffs are a double-edged sword. They could ease short-term inflation pressures, but the Fed's going to have a tough time if these hikes keep inflation expectations elevated. One UBS strategist even called gradual tariffs problematic for monetary policy. Hot take from our side is this is going to be a Band-Aid solution for now. Gradual tariffs might avoid an inflationary blowout, but they're also not addressing the structural issues with trade. Will markets buy into that? That's the trillion-dollar question that we're all looking for the answer for. Now, all eyes are coming on tomorrow's CPI report. And here's the headline. Headline inflation is expected 2.9%, up slightly from November's 2.7%. And our core inflation is looking at 3.3% year over year, holding steady for the fifth month in a row. Why does CPI matter? It's the consumer-facing side of inflation. If this number doesn't budge, or worse, ticks higher, the Fed's going to stay hawkish and rate cuts will feel like a distant dream. Investors, buckle up. This could be a market-moving moment. Now let's talk markets. The Dow, our winner today was the Dow of all of our big indexes. It was up 0.5% today. But the S&P 500 and NASDAQ couldn't find its footing or hold on or keep up. Now, why was this the case? The PPI data calmed some fears, but it's not enough to shake off broader inflation worries. And get this, the 10-year Treasury yield is hovering near 14-month highs, and the dollar is cooling off after a 5-day win streak. That's mixed messaging at its finest. Here's the kicker. Bitcoin popped 5% to trade near 97,000. Are traders hedging inflation risk, or is this just another day in crypto land? Either way, it's a reminder that markets are looking for any sign of relief or opportunity. So let's just bring it all home and wrap it up all together with a pretty bow. For your wallet, softer wholesale inflation is good news for future consumer prices, but don't expect miracles overnight. Number two, for the Fed, they're watching these numbers like a hawk. A sticky CPI print tomorrow could keep rate cuts off the table well into 2025, most likely June if things go well, but most people are thinking September at this point. And finally, for you, for the investors, volatility is here to stay. With inflation data and Trump's tariff moves in play, markets are navigating a minefield of uncertainty. And here's our final hot take for the night. Inflation isn't going away quietly, and if tomorrow's CPI data disappoints, don't be surprised if the markets throw another temper tantrum. And that's all we have today, folks. That's your market breakdown. Tomorrow's CPI report is going to set the tone for the weeks ahead. Will inflation finally show signs of cooling, or are we in for more pain? Drop your hot takes in the comments, hit that subscribe button, and stay tuned for more updates. Thank you for watching. Again, my name is Max Pitts, and I'll see you in the next one.